There is a difference between a thing that is random and a thing that only looks random. 5 years ago, a machine that tens of thousands of us trusted with everything quietly stopped telling the difference. This morning, that forgotten mistake is worth $89 million. It is Sunday, the 2nd of August, 2026. Bitcoin trades at 63,100 as of 5 o'clock Eastern, dead flat on the day. Hold that number a moment. $89 million walked out of private wallets this week, and the price did not so much as flinch. Now are bored because something moved on it overnight. At 4 o'clock this morning, Eastern, Bitcoin's optimized trend flipped bullish on a read of the InvestAnswers Decision Support System. Green. Yesterday morning, I told you it was red, and I did not dress that up for you. It is green now, and I will not dress that up either. Our engine has renamed the regime a crypto decoupling, pointing up, with Bitcoin standing as the sole bullish anchor on the entire macro layer and the leader of the board, while the broad market, gold and the long bond, carry no green flag between them, and its nearest kin are not with it. Ethereum, at 1,860 this morning, printed mean reversion oversold twice inside 16 hours, 8 o'clock Saturday morning, and again at the stroke of midnight last night. Solana fired the same mark in those same two windows. Read the shape rather than any one line. The trend turns up beneath Bitcoin, while the assets closest to it print, stretched hard to the downside. That is not a complex moving together. That is one asset walking away from the others. Now to the 89 million. Since the 30th of July, an attack has been draining cold card hardware wallets, and it is still spreading as I speak. Galaxy Research mapped the opening sweep. 1,196 addresses emptied in 41 minutes. Losses stood near 70 million on Thursday, 75 million yesterday. As of this morning, roughly 4,500 addresses and close to $89 million gone. Here is the root cause, and it is the part that should hold your attention. In March of 2021, a firmware change routed seed generation on those devices to a software random number generator instead of the hardware chip built to do that one job. 5 years. Every seed born on that path was drawn from a machine that only looked random. Given a device serial and some timing data, the seed can be rebuilt offline, at leisure, with no network to break and no lock to pick. CoinKite shipped emergency firmware on Friday. It does not unring the bell. A compromised seed stays compromised, and the only remedy is new hardware, a new seed, and a sweep. Hear clearly what this is and what it is not. Bitcoin did not fail. Not one line of the protocol misbehaved. Every one of those transactions was valid, signed by the correct key, confirmed exactly as designed. The network cannot tell the difference between you and someone holding your key, and it was never meant to be able to. The failure happened 5 years upstream of the theft, in the ceremony of making the key, inside a box that said, "Trust me." So take the lesson clean. Randomness you cannot verify is randomness you do not have. When you forge the seed that guards your life's work, put entropy into it that you counted with your own hands. Dice you rolled on a table you were standing at. Do not accept a sealed box's word that it rolled them for you. That is not paranoia. That is $89 million of tuition, paid by people who did nothing wrong except believe a specification. And be honest about the other half of it. This is the cost of sovereignty, and it is a real cost. Nobody reverses this. There is no chargeback, no fraud department, no committee that makes those 4,500 people whole. Anyone selling you self-custody without that sentence is selling you a story. We take the trade with our eyes open, because the same property that makes the theft permanent is the property that makes the supply schedule permanent. Now to a war being fought over something no one can mint. On Friday, SpaceX confirmed it will keep running the 59 gas turbines that feed its XAI compute outside Memphis until a permanent 1.2 gigawatt gas plant is finished, with full removal not expected until July of next year. Those turbines have run without the federal air permits they require since April, when the Southern Environmental Law Center and Earth Justice sued on the NAACP's behalf over Clean Air Act violations. Read that plainly. One of the best capitalized operations on this earth could not buy, rent, or wait its way to electricity, so it burned the gas without the paperwork and took the lawsuit. Last Monday, New York became the first state in the union to bring down a one-year moratorium on new data center construction. New large load grid connections across America and Europe now run 2 to 6 years, and closer to 7 in the worst regions. Gartner expects 40% of artificial intelligence data centers to be power constrained by 2027. Cathie Wood's house stands squarely against that red, and you should hear it. ARC's position is that energy is a local friction point, not a global constraint, and that a $7 trillion software pool will simply fund its way through the problem. Take it seriously. She has been right about this capital spending cycle while most of the desk was calling it a bubble. But a local friction point does not make a company run 59 unpermitted turbines and eat a Clean Air Act suit for the privilege. And mark what our side of the trade did about the same scarcity. Bitcoin's mining difficulty has now fallen just under 20% from its November peak, down to roughly 126 trillion, as miners sell their power into artificial intelligence hosting rather than hashing with it. On or about the 9th of August, the network retargets again, another 2.5% lower on current projection. Sit with the asymmetry there. Every other actor in that story has to go and ask. A permit, a legislature, an interconnection queue measured in years. Bitcoin asks no one. When power grows dear, the network makes itself cheaper to secure automatically on a block because the rule was written once and has never been amended by anybody. 21 million coins. No chair, no committee, no ceremony. One more, and it lands on Friday. Jordi Visser has argued for 2 weeks that the easy artificial intelligence trade is finished. Late last month, he added a piece I had not heard him put that way before, that labor market weakness is now a net positive for Bitcoin rather than a risk-off trigger. Invert what he is claiming. For 15 years, a bad jobs number dragged this asset down with the rest of the risk complex. He is saying the sign has flipped. Friday brings the July employment report, consensus near 85,000 jobs after June printed 57. And it arrives at a central bank whose last meeting produced dissents pushing for a hike, not a cut. Now set that beside our own board this morning, because the two things arrived by separate roads. A thinker argues Bitcoin has decoupled from the labor cycle. Our engine, reading nothing but price, renamed the regime a crypto decoupling 4 hours ago and left Bitcoin as the only green anchor standing on it. When a thesis and a machine reach the same verdict without consulting each other, that is worth more than either one alone. Friday is the test of it. 3 things go with you into the week, Warband. $89 million proved the weakest link in this system has never been the chain. It is the ceremony at the edges, and that link is yours to forge. With your own hands, out of randomness, you can count. 59 unpermitted turbines proved that watts, not chips, are the binding constraint of this decade, and that every bidder for them needs permission except one. And our engine turned Bitcoin green overnight while the broad market, gold and the long bond, stayed dark. Trade Friday's jobs number against the old correlation and watch closely whether it still holds. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar the HODLBARBARIan. Own your keys. Make your own randomness. Skål.